Should you be buying Bitcoin, cryptos, or gold? Well, our next guest is a proponent of both and sees value in both spheres. Frank Holmes, CEO of U.S. Global Investors, is back joining me on this beautiful Monday morning. Frank, welcome back.
It's great to be back. Miss you.
Miss you too. Gold has been very volatile for the last couple of weeks. Now, before we continue, you called it. In our prior interviews, you had said that short term, gold was a little bit overbought. You expected more volatility. That was the correct call. And now that we have gone down to the low 1800s, touching the high 1700s, are we done correcting, Frank?
I think we're pretty close. What's happened since August in the summer is the 10-year government bond has gone from 50 basis points low up to 97 basis points on Friday. That doesn't sound like a lot, but in percentage terms, it is huge. It's almost a double. And that impacts because there's this trade that happens, a parity trade between 10-year government bonds, are they a positive, negative rate of return, and gold. And you can see it recalibrating. So what's happened is that gold has gone down over 20 trading days and 60, 1 and 2 standard deviations. So we're getting close to that bottom period. Interesting enough, we're seeing that the real interest rates, inflation, CPI went up to 1.4%, which I believe, it's much higher. And I just noticed as a businessman looking for my insurance, my healthcare insurance, my corporate insurance, some of these prices are up 50%. So there's inflation in the economy. But more important for this gold trade, gold is oversold. I think that going into next year, the government's going to panic still, and we're going to get more money printing. And I think we're going to get a reset of the 10-year government bond. Either the CPI number jumps to reflect inflation, or the 10-year government bond yield trades down. That widening difference drives the short-term fear trade of gold. And so now I'm asked all the time, where do I think the price of gold is going next year? And its standard deviation says, mathematically, it's non-event for gold to go up 1 standard deviation, which would be about 20% move. And a 2 standard deviation, which happens so often now in the past 21 years, we could get between a $400 move and an $800 move in the price of gold over the next 12 months. That would take to 2,200 to 2,600 is the range I think is very doable.
It's a pretty conservative range given that you have a $4,000 price forecast for the next 3 years.
Yes, but it has to do with the money printing catches up. It doesn't happen in a straight line. Even this secular bull market we witnessed, if we go back to 2001 to 2007, where the 50 days above the 200-day, there are many times of big drops and declines and then rallying to new highs and the new highs. So we're still in that cycle. We're still the 50 days above the 200-day moving average for me, and the golden cross is still embraced. There's no death cross. Some people come in with 100 days, but no, the technical people always use 100 is now the 200-day moving average, which is 10 months. So with that, it would just be normal for it to go through this trading range.
Why do you think gold has been trending down over the last 3 months? Now, I know that the vaccine news have been a little bit of an impediment to growth, but that only happened in the last month. If you look at September, October, trending down as well. What was the cause there?
It's real interest rates. It's the spread. So the government says CPI is 1.3 and then went up to 1.4, which is only 10 basis points. But the 10-year government bond went from 50 basis points to almost 100. So that's a big percentage move wise. And that gap between what is negative real interest rates start to shrink. And that's what helps with basically the selling off of gold. But this has done this many times now, and it's usually the best trade is to accumulate when this transition is taking place.
I wonder if the same macro drivers that have been driving gold and will continue to propel gold into the 2,600 range next year, you said, are those same macro drivers also responsible for Bitcoin's rally that we've seen in the second half of this year?
Well, Bitcoin's different in respect. There's the number of wallets, people that are embracing Bitcoin, that's been growing for the past 3 years. Nice, steady growth. But I think what's happened was the halving. And historically, whenever you get a halving of your mining supply, it doesn't matter if it's gold, if tomorrow if half all the gold mines in the world said we're going to cut supply by 50%, I can assure you gold will be at 10,000. So what we're seeing now with the Bitcoin in May is that halving took place, and then all of a sudden that supply and then demand is growing, and then all of a sudden you get these pops that is testing the $20,000 level again. So I think it's a supply and demand function. What we are seeing, David, in the commodity pits is copper. Copper hits an 8-year high. Why is that? The supply of mines has been falling because of two things. The grade is declining, and there's been strikes. So that's had a big impact. Before Ivanhoe brings on all this rich production out of the Congo, that supply imbalance has been very bullish for copper prices. I think that's what's happening with Bitcoin. Now with Ethereum, it's different. Ethereum's new demand has come from this DeFi, decentralized finance, which is happening in that ecosystem of cryptos around the world. That's basically improving the demand for Ethereum coins because a lot of these DeFi are in the backbone of it. On the supply side, the restriction is now they're going to what they call Ethereum 2.0, where they're basically saying we're no longer be mining. Those that want to stake, they can deposit their Ethereum. They can never get it back, and they will get a yield. They'll get a return on those Ethereum that they deposit. So what's happened there is that the supply is all of a sudden shrinking, and demand is growing, and DeFi continues to grow. So I think that Ethereum can actually trade much higher. Reminds me of the trade with silver and gold earlier this year. Gold takes off, silver's still languishing, the spread goes over 100 to 1, and all of a sudden, bingo, the silver ratio changes, silver takes off, it's outperforming gold. I think we'll get that back with Ethereum in 2021.
So Ethereum is like the silver of the crypto space. That's a pretty good analogy. Let's talk about Hive now, your company. How has it done this year, and what were the drivers of growth?
Well, I'm so thrilled. You know, Hive Blockchain was covered. The debut of launching Hive Blockchain was on Kitco. And it was basically, there were so many gold investors that were skeptical about opening an exchange account and depositing money to own Bitcoin or Ethereum because of all the negative hacking news, etc. So what happened in that imagination is that Hive became a proxy, and it started to grow. And we went out at launching, we raised in 3 months over $200 million, deploying, building out facilities in Iceland and Sweden. And now Hive is basically in Canada. It's expanded in Quebec. It's looking at expanding with the next transaction when it closes, subject to final due diligence in New Brunswick. So we have become the darling of this space. But most important is what we recorded in the quarter where we actually took total control of the facilities away from the strategic partner that was the company started with. Now we're running it, and we had record earnings. And that's something that's propelled the stock. And like a gold stock, gold stocks have high free cash flow, they have high earnings, and gold's rising. Gold stocks far outperform the underlying commodity. Ethereum is basically had a great rise. Bitcoin's had a phenomenal rise this year, and Hive has basically participated in that. I think the calculation year to date in Canada, we've traded 1.5 billion shares, or some number very close to that. You add over the counter in the US and in Germany, we're pushing close to 2 billion shares have traded. So it's become a proxy for those that want to play Bitcoin, Ethereum, but do not want to go and buy the coin itself. They're using us as that proxy.
I got asked this question by a viewer, and the question was, are there companies in the crypto space that are functioning like a Franco-Nevada for the gold space, like a royalty for cryptos?
Well, right now, I think we're probably the closest to it if you look at the revenue per employee. There's only a handful of employees, otherwise we contract everything out. So I really like the fact that Hive has high revenue per employee, much higher and much more is towards the direction of a royalty company.
Okay, let's touch on the drivers of Bitcoin one more time, Frank, and let's talk about the technical details about why you think growth is going to happen next year and beyond.
There's an adoption. So some of these big owners originally in Wales have been selling, and companies like Grayscale and 3IQ in Canada have been raising capital. And last week, Grayscale, I think, purchased through their closed-end corporate fund in the US, $140 million worth of Bitcoin. So you're finding that the Bitcoin owners are showing up in the vehicle of a closed-end type of fund. and so it's being taken away from the crypto space. So we're getting the securities are basically reinventing themselves, and I think this is another part of that demand.
Do you think Bitcoin and Ethereum for the next year have more upside potential than gold? I mean, gold, you said it's, give it a 2,600 target. That's 40% increase from today's prices about?
I think there's just what you have to embrace with that trend could be higher, but the volatility is much greater, David. It's really much greater. So anyone that's going to go into this space must respect that DNA of volatility over one day, over 10 trading days is just substantially greater. So any type of correction, Hive went up to $6. It fell back down to under 10 cents, and now it's back over $1. I mean, these are incredible moves. The best part is it's correlating with the movements in Ethereum and Bitcoin that Hive is participating on a day in, day out basis, the way a gold stock is moving with the price of gold.
We've talked a lot about your views on the show about various assets, but I'd like to know how you're allocating your assets personally with your fund as well, going into 2021 with the macroeconomic environment that we have, with the administration that we have coming into January. What do you think?
Well, I'm a sophisticate, so me having a greater exposure to gold, I think the average person out there should have the golden rule. That's 10% exposure to gold or gold stocks, or buying. I always recommend buying numismatics or some wafers yourself. I think that's just smart. Silver or gold, and then owning quality gold stocks. And otherwise, I think that for myself, I have a greater weighting because I control a vehicle called U.S. Global Investors, and it's in that business. So from that end, I have a different perspective. But I think for the average person who's 60 years old, as a listener to your program, that having 10% weighting is just prudent. If they're more sophisticated, they can go to 20%. But the largest hedge fund in the world, which has about a 10% on average, the Bridgewater, run by Ray Dalio, it's about 10% gold related.
Yeah, I know you're also bullish on stocks. Well, you were a couple months ago. Do you still feel that way today? The Dow's already surpassed 30,000 points.
I'm so bullish. The only thing that's going to derail this is Biden coming out with announcements to increase taxes and increase regulations. And that has always been a factor that impacts and becomes a headwind. Right now, global PMIs, in particular, China and America, are above 52. They're robust, they're strong. Europe is going to spend more money to try to get theirs above 50. So when you have China and America, which is 40% of all global trade, in a bullish trend, that's extremely bullish for all commodities and for job creation and global trade. So I think we're on a nice tear here, at least until the end of January.
Well, wouldn't a tax increase also be bad for gold, Frank? Would it? I mean, essentially, you're shrinking the money supply.
Well, it has a bigger impact on gold stocks. I think what the biggest impact short-term to bullion really is this taxation that takes place in India. It's on or off because India is such a big gold consumer. And we see this morphing that takes place every time they slap on a duty tax and take it off. So I think it's much more important there. What's important for your listeners is that 40% of all the world's population is China and India. And when you throw in the Southeast Asia, we're now 50% of the world's population. If we go back 30 years ago, China and India were 10% of gold demand, predominantly for that love trade. Today, they're over 53%, and it's highly correlated to rising GDP per capita and that cultural affinity. If you look at Southeast Asia and you look at new trade agreements that China's entered into, and you look at the region and you look at GDP per capita, every time gold sells off, the love trade kicks in. They just start buying. Every time gold has this big panic trade and trades up 2 standard deviation, they slow down. Now we're in that correction mode. I remain very bullish for seeing that that Asian whole group of Asian countries basically buying gold when it goes on to a discount.
Yeah. Is there anything you don't like, Frank? I mean, you like equities, gold, Bitcoin.
Yeah, I love it. Remember, like I said earlier, government policies are precursor to change. Negative real interest rates and rising money supply is very bullish for overall stock market and in particular for gold. And we're seeing the growth in crypto as a new sort of ecosystem that's growing because we're seeing new millennials coming into investing in the stock market unprecedented. Well, they were early on the whole crypto drive. So we're seeing this sort of, broadening markets, both for stocks and for crypto. So that remains very bullish. Headwinds have always been rising real interest rates, rising taxes, rising regulations. Right now, it's full throttle. Be long or you'll be wrong.
Yeah, so these three asset classes, cryptos, equities, and gold, if you were to take, let's say, a millennial investor or maybe a Gen X investor who has a bit of cash right now, he wants to invest, and he has trouble allocating his assets. He can't decide what percentage he wants to put in stocks, Bitcoin or Ethereum, or precious metals. Walk us through your thought process here.
So if you're 30 years old, 70% should be long in equities, growth stocks, more speculative ventures. If you're 60 years old, it should be only 40% should be into looking at these types of investments where they're equities and more speculative investments. So you have to shrink that as you get older. You want to have a greater levels and different sources of higher income. Versus when you're young, then you should actually be more adventuresome and looking at those growth ideas.
Yeah. Do you consider cryptos a speculative asset or a store of value?
Oh no, it's totally speculative. No, it's very speculative. And whenever you have a new industry, it's always going to be much more speculative, and it shows up in its volatility.
Okay, fantastic. Frank, thank you so much for coming on the show, and I look forward to following up with you.
And happy holidays.
Happy holidays to you too. And thank you for watching Kitco News. We'll have much more for you. Stay tuned.